I believe we are now on the air. I apologize, getting just a little bit of a late start. I was trying to answer some questions from some of the last minute questions that were coming in regarding our last webinar, where we had discussed also some of the things that you want to do when you prepare to go out and buy a new home. By the way, for some of the new people that are just jumping on, my name is Mike Mortensen. I am with Exit Realty Associates. And what we're going to cover today, we've covered before, but I get so many questions regarding, what do I do? And there's so many misconceptions about buying a house where people think it's just impossible. Oh, I have to get 20% down. I'll never be able to save that. And it's really not, it's not as daunting or as scary as some would make it out to be. So I'm going to just jump right into, let me see here if I can quick find it. There it is. I'm going to jump right into our demonstration here. First, we'll get out of there. Okay, so this is going to be a quick rundown. And again, if you've seen this, I still would like you to stick around for it because we're going to be answering some additional questions that have been coming in. To begin with, again, my name is Mike Mortensen with Exit Realty Associates. If at any time you have any questions after this webinar, please feel free to give me a call. My number is right there, 703-888-9947. It's my direct line, so you can call me. You can text me at that line. I will get back to you just as soon as possible. Or if you feel more comfortable, again, my email address is there at mikemortensenrealtor@gmail.com. And again, I will get back to you with the answer you're looking for, hopefully as soon as possible. Now, we've kind of gone over this. What's the first thing you do when you decide you're ready to buy a new home? Well, a lot of people start scouring the internet. They start looking for the perfect neighborhood for their dream home where they're going to raise their family, whatever the case. No, that is not what you want to do. Some people even talk about, well, if we're going to have this new house, we can't have this furniture. This is just all ratty. We better go get some new furniture and maybe some appliances. Again, no. And by the way, you don't want to go out and buy a whole bunch of stuff right before you start searching for a new home, because A, you're either going to spend all the money that you're going to need for a down payment or closing costs, and B, if you put it on credit, it's going to actually hurt your credit score and may even knock you out of the running to qualify for a mortgage, or at best, you may end up having to pay a higher interest rate. So both of these things are definitely not. So then the question is, okay, well, the first thing you do when you decide you're ready to buy a new home is what? Well, first thing you do before you ever jump on the internet and go to realtor.com or go to a realty website, wherever, to look for new homes or open up the newspaper or even start driving around your favorite neighborhoods, get your finances in order. Because if you don't have this part taken care of before you go out, it's going to be a painful situation, because you're going to go out and fall in love with a neighborhood or a home and start the process and then go to see if you qualify and realize that you've got issues and you don't qualify for as much money as you need for the home that you just found, or you don't qualify at all. Whatever the case, get your finances in order. And it's really simple. All you have to do is pull your credit reports. First thing you want to do is find out, where do I stand? Am I a good credit risk? Am I a bad credit risk? And you can find out by going to the official website to get your credit report. This is your free credit report that you get one time a year. Now, I know on television you're going to see a lot of advertisements for free credit report. Well, it's not really free, because they're going to give you the first one free, but you have to give them your credit card information. And what's going to happen is they're just going to bill you either annually or monthly or something, so you can continually get your credit report. You really don't need that right now. All you need is just to check your credit right now. So this is the official website that will give you a free credit report from the 3 credit reporting agencies, and that is annualcreditreport.com. And try to make sure you get that exactly like that, because a lot of the scams or the other websites, they try to get a name that's similar to that. So annualcreditreport.com, and you can pull up, like I said, the 3 credit reporting agencies. That's TransUnion, Equifax, and Experian. And again, like I just said, avoid those other sites and those other credit repair services, because quite frankly, at best, you're going to end up having to pay monthly or yearly. And at worst, it may be a scam. So you may be out a lot of money. So annualcreditreport.com to pull those 3 reports. And what you want to do is read each one of them individually, and make sure everything on the report is correct. Now, each one is going to have basically the same information. They just format it a little bit differently. But go through and make sure that everything is correct. Also, look for anything that you may have overlooked. For instance, a lot of times what I hear from a lot of mortgage brokers and lenders is when they go in, they may find an old doctor bill from 3 or 5 years ago that went unpaid because the person thought that the insurance was going to pay for it, so they never paid it, and then the insurance didn't pay it, and it just stayed on their credit report for years. And finally, if someone goes to pull that, if they want to buy a house, that's going to be a big red flag. Someone's going to say, okay, wait a sec, we've got an unpaid bill here, and it's been unpaid for 5 years, and they haven't even tried to repay it. So that's a simple mistake, and a lot of people have that on their credit reports, and they don't even realize that. But it's one that you can easily get repaired. You can go to whoever you owe the money to. If it's legitimate, you do owe it, pay it off, and make sure that that person then reports that to the credit bureaus to make sure it gets corrected or added to your credit report that you did pay it off. Or definitely go to the credit reporting agencies, and actually tell them it's been paid, here's my receipts, whatever, and have them correct that. But yeah, so you want to make sure any mistakes are corrected, and you want to make sure that anything that you may have overlooked is also taken care of. And by the way, if you do find mistakes, make sure you follow the guidelines for each of the individual credit reporting agencies to get them corrected. They each have their own little ways and their own processes and procedures to correct mistakes. So if you find them, follow the specific guidelines for that credit reporting agency to get that mistake corrected. Now, there are some, now that you've got your credit report figured out, you've got that, yes, it's all legit, you know what your credit score is and everything, there are some things that you want to do to prepare before you actually go to get a loan or to even start looking for a home. So there's a few credit do's and don'ts. One is kind of obvious: don't max out your credit cards. I can actually hear from here a bunch of people saying duh, but you'd be surprised. Like I had mentioned earlier, a lot of times someone will be pre-approved for a loan, for a mortgage, for a home. And in between the time they were pre-approved and the time that we go to settlement on the house, they figure, well, we're going to get this new house, we better get furniture for the house, so let's be prepared. They go out and they buy a whole bunch of furniture on their credit cards. Well, then the day before we go to settlement, the mortgage banker goes and runs one last report just to make sure everything is okay and everything's the same. And then they find this big balance on a credit card, and everything comes to a screeching halt. And nothing worse than the day before you're going to go to settlement and the banker calls to say, we have a problem. It can be worked out, but it's still something you definitely don't want to do. And you just don't want to have your credit cards maxed out in general. That's not going to look good on your credit report. Because actually, like I said, when the mortgage broker is looking at how much you can borrow for your mortgage, they determine that by what's called your debt to income ratio. And what that is just what it says: how much debt you have compared to how much income you have. So if you have maxed out your credit cards, they're going to say, okay, well, out of the 3 credit cards that he has maxed out, he owes, if he just pays the minimum payment, he will owe, let's say, $1,000. And hypothetically, let's say the borrower only makes $2,000 a month. So the bank is going to say, okay, well, at minimum on just the credit cards, he owes 1,000. He only makes 2,000. So that's a 50% debt to income ratio. The debt is 50% of the income. That only leaves another $1,000 to pay a mortgage, to pay insurance, to pay utilities, all your other bills, gas, food, entertainment, clothes, whatever. So you can see where the more you're maxed out, the less amount of money you're going to be able to borrow from the bank. But on the flip side of that, you also don't want to pay off your credit cards and then cancel them, because by canceling your credit card, you virtually erase your credit history. I mean, when they go to pull your credit, they see you have no active credit. So what that tells the bank is, well, I don't know if this guy's a good credit risk or not. I mean, there's nothing to show that he's currently a good risk. So you don't want to cancel any or all of your cards right before you're going to buy a new home. It can literally send your credit score tumbling down. But there are some credit dues. For instance, you do want to work to have that balance on your credit card at least 50% or less. If you can go even further, that's great. Ideally, you'd like to keep the balance below 25% of your limit. And again, that just looks better for your credit score, and it also means you're going to qualify for more money for a higher mortgage. You also want to use your cards to show activity. A lot of people say, well, okay, I don't want to put more than 50% or more than 25%, so I'm just not going to use them. Well, if you don't use your credit card, it doesn't show activity. And again, the bank wants to know that you are using credit responsibly. So ideally, you'd be using your credit cards regularly and trying to pay off the balance entirely. Ideally, you'd have a zero balance at the end of the month every month. Use your credit card during the month, knowing that you can pay off the entire thing at the end of the month. That is gold in the eyes of a mortgage broker or a lender. And like I said, now, you talk about paying off balances. Don't go and pay off your balance using money that you are planning to use for a down payment and closing costs. A lot of people think, well, if I pay off all the balances, my credit score will look good and I'll get the loan. Well, if you get the loan but don't have the money to pay the down payment or closing costs, you're not going to get the house that way either. So it's kind of a catch-22. Basically, just going into the whole thing, try to keep it below 50% or 25% of your limit, and ideally pay them all off. But keep your cash reserves as close to home as possible. The bank wants to see you have a nice little nest egg waiting for any costs that may be coming up when you buy the new home. So once you have your credit reports and your credit card situation under control, then it's time to say, okay, we've got all of the mistakes, or we checked our credit reports, they look good. I'm working my credit cards very responsibly. Now it's time to go and meet with the lender or your mortgage broker to find out how much money you can afford to borrow to buy your new home, because that's really going to be the number that you're going to use when you start searching for a home. No sense falling in love with a house that you can't afford. It happens all the time. But on the flip side too, don't go looking for homes that are, way below what you can afford. You might as well, you try to find the middle ground. You don't want to max out and borrow the maximum amount that the bank will give you, but you also don't want to, go too low as well. A lot of people, you hear horror stories when they say, oh my God, I tried to get a mortgage. It was awful. I was digging through records from years ago, and I was trying to find a bill from a doctor that I went to that I don't even know if they're in business anymore. You know, you hear all these horror stories of how people had to jump through hoops to get their mortgage. And the majority of those people had to jump through hoops because they didn't take care of the information that we just talked about. They didn't go through their credit report. So when they went to get a mortgage, the banker probably found a mistake or found something outstanding that the person didn't know about because they didn't check their credit report before they went to the banker. And now they're all freaking out. Oh my God, my credit report's screwed. So not only are they kind of blindsided, now they have to go and try to correct the problem in order to get that documentation to the broker. That's where you've already kind of stopped that, because you will have already taken care of your credit and your credit report before ever getting to the mortgage broker. And when you do go, just remember the number 2. This is going to keep it very simple. And again, I am not a mortgage broker. I'm not a financial planner. So please, give me a call. I work with several incredible lender mortgage brokers. They can take you through all of this. But as a general guideline, I can tell you, to make it very easy, remember the number 2, because it's all you'll need. Here, you're going to need 2 of your most recent W-2 forms when you visit the lender mortgage broker. And that basically is going to show that you have some type of stable income. You'll need 2 of your most recent pay stubs. And what that is it just basically shows what you currently are taking in for income. You want to bring 2 months of bank statements, and that's going to just show, how much money you have in the bank for, closing and possible down payments, and just basically an overview of your current financial situation by looking at your bank statements. But by the way, keep in mind, you also, if you have investment accounts, retirement accounts, you have any type of any accounts that are above and beyond just regular savings and checking accounts, you want to have statements from the last 2 months for all of those accounts as well. Again, this gives the banker a better idea of just your overall net worth and what your cash flow situation currently is. And finally, you want to bring 2 years of tax returns. And again, that gives them the real broad, high overview of your financial situation. You remember the number 2, and you bring in 2 W-2 forms, 2 recent pay stubs, 2 months of bank statements, 2 months of retirement account statements, and 2 years of tax returns, and you are going to be 95% of the way there. And especially if you've already gotten all your credit report and credit card situation, if you've got that all taken care of, it's going to make it a breeze when you go talk to your lender or mortgage broker. Once the lender and the broker goes through all of your information, checks out your credit report, looks at your credit usage and where you're at currently, and they check out all those documents that you just brought in, you're going to be given basically a pre-approval for a certain amount of mortgage based on how much you can put down. Keep in mind, there is a big difference between pre-qualified and pre-approved. A lot of times I'll have a buyer call me saying, hey, we want to go, will you show us this house? We drove by it and we really love it. And I'll say, okay, well, have you talked to a mortgage broker or a banker already? Are you pre-approved? They go, oh yeah, we're pre-qualified for up to $400,000. I go, whoa, are you pre-qualified or are you pre-approved? And they'll say something, oh, we're pre-qualified. Well, there's a big difference between pre-qualified and pre-approved. Think of it this way. Being pre-qualified, it's kind of the equivalent of getting those credit card offers that we all get in the mail literally every day, it seems like. And basically, when you get those credit card offers in the mail, it's not that you're approved to get a credit card at that amount, credit balance. You're just pre-qualified to apply for that car. Basically, the credit card company is saying, hey, we saw your credit score, and basically with that score, we think that you could probably get a card. So here, why don't you apply for it? They're not saying they're going to give it to you. They just say, hey, we think you're pre-qualified to apply for it. And it's the same thing for a mortgage. A lot of people will call a mortgage broker. Mortgage broker will say, okay, well, give me your social security number. They'll pull up your credit report and they'll say, okay, I see your credit score. And then they'll say, okay, well, how much do you make? And you tell them how much you make. And they say, okay, well, with that credit score and you're making that much money, what would you say your monthly bills are? And then they basically just go, from what you just told me on the phone, I would say you're pre-qualified for up to $400,000. Well, that is just that's his word. It's not an actual pre-approval. Pre-approval is when the lender actually not only reviews everything that you supplied them, they actually verify everything that you supplied them. So they look at all those documents you brought, and they actually double check to make sure they're all accurate. Once they know that, they have a really good picture of your credit history. They know where you are right now as far as your cash flow and how much you make, the amount of income you have coming in. So they have verified all that. They can pretty much, with pretty certainty, pre-approve you and say, yes, as long as everything stays the same as what we looked at today, when it's time to buy your house, you will get this much money, up to this much money. That's a big difference between a pre-qualified, where they just say, you can probably get this much. You should apply for it. So just keep that in mind when you hear pre-qualified and pre-approved. And keep in mind as well, home sellers always favor a pre-approved buyer's offer. Why? Because if two offers come in for the same amount, one offer is for $400,000, another offer is for $400,000. Only one of them included a pre-approval letter. Who do you think the seller is going to go to? I'm going to pick the pre-approval buyer, because I know not only are they probably more serious about this, I also know that they have the ability to buy it. If the other person, you don't know that you accept their offer, and then you go 2-3 weeks down the road and all of a sudden find out they can't get financing, then you got to start the whole process over again. So the home seller is definitely going to favor a pre-approved buyer's offer. So definitely you want that pre-approval letter in your hand when you start looking for new homes. Let's go just quick recap the steps, things you want to do before you start looking and buying a new home. Pull your credit reports from annualcreditreport.com. You also want to correct any mistakes that are on those reports. Look through all three of them individually and treat them each individually. Also, if you see something that you overlooked, maybe a past bill that you let go, take care of that before you move forward. Manage your credit card usage and your balances. So use your card regularly, and also try to keep at minimum your balance below 50%, ideally below 25%, and more ideally, if that's even a word, you want to pay off your balances. So use your card knowing that you have enough cash to pay it off at the end of the month. But don't use up all of your cash to pay off your balance, cash that you were going to use for down payment and possible closing costs. And when you do meet with the mortgage broker, remember the number 2. Remember all the 2 documents that you have to bring with. You do that. You do these 4 steps right here, and you are just going to breeze in and breeze out of that bank, that lender's office. And you're going to breeze out with a pre-approval letter. And again, like I said, sellers favor buyers with a pre-approval letter. And when you have that pre-approval letter, you include it with every single offer that you put for a home. And ideally, the banker is going to give you a pre-approval up to a certain balance. Let's say up to $400,000. Well, if you were putting a bid offer in on a house that's only $300,000, don't include a pre-approval letter that says you're pre-approved up to $400,000 with your offer. You want to go back to your banker and say, I need a pre-approval letter for 300 that says I'm approved for $300,000. The banker will quick put one together for you and use that when you put your offer in. Because if you use the pre-approval up to 400,000, now the seller gets that and looks at it and goes, hey, this person can afford a lot more. So maybe we're going to hold tight to our listing price, or maybe even want to jack up the price. So when you get that pre-approval letter and you include it with every offer, always get a new pre-approval letter that is only approved for the amount that you are offering. Does that make sense? So now what do you do? Well, just before anything, keep in mind, this will be the biggest, or at least one of the biggest financial transactions that you'll have, or most people will have, in their entire life. It's nothing to fool around with. It's nothing to jump into real fast. And because the big thing here is financial transaction, you have to take the emotion out of it. I know that buying a home is, trying to take the emotion out of it is almost impossible, but you really have to take the emotion out of it and look at it as a financial transaction, which is why it is so valuable to have a realtor in your corner. To hire a realtor, you now can use your emotions, because the realtor is the one that's going to be handling the financial transaction. You don't have to feel guilty about trying to get a really good buy, or you're not going to show the buyer that you're super excited about this house. I'm going to go in and deal with the seller very businesslike, so they can't read into it thinking that you're so excited to get this house, they're going to, jack up the price. So keep in mind, this is a financial transaction, and probably one of the biggest ones you'll have in your entire life. This is why working with the wrong people or getting bad advice and information can and will literally cost you thousands and thousands of dollars. And I should change that: working with wrong people or trying to do it by yourself. Can you do it by yourself? You probably could. Look, it's going to be a lot of work. You're going to be kind of swimming in, paperwork, and what do we do next? And am I getting ripped off? And your emotions are going to get all tied up into it. You could do it, but in the end, it's going to cost you thousands and thousands of dollars, and potentially you're going to lose a little hair over it, because it's going to be a little bit crazy. So, look, we know you're interested in buying a new home. You've sat through this entire webinar here. You just learned a few steps that will ensure a smooth buying experience if you follow all these steps. And I mean, look, you know the value of honest and accurate information from a qualified realtor like myself. I mean, this is coming straight from the heart. I mean, the whole reason I'm doing this is to make it as easy as a process as possible for every buyer, and quite frankly, every seller. Because the easier it is for you to buy the house, the easier it is on the seller. So I'd love to help you out. There are a lot of steps. Like I said, a lot of paperwork involved. Real estate laws get thrown in here. They need attention throughout this entire process. Look at the process. I mean, we're talking, you have the financial prep that we've been talking about today. You're going to go get that pre-approval. You have to deal with the banker. Then you're going to have to start the home search. You're going to have to know what homes are available. One thing that's hard to find, you go, well, I can go on to some of these websites and find out what homes are for sale. Well, one of the things that I can bring to you, or a realtor can bring to you, are homes that aren't on the market yet, that are coming soon. You can be like the first one to get in and take a look at some of these. So you've got the home search that you're going to have to deal with, and you're going to have access to homes. Not all the time. You might find a home, but it's not available to look at without a realtor, or you have to wait for an open house or something like that. You find the house of your dreams, then you got to put together an offer, put together an actual contract. That's what an offer is. You have to have a legal contract put together, and then you have to negotiate with the seller. Let's say everyone agrees, then starts the inspections, the insurance, the preparation for settlement and closing with the bankers. And then finally, you gather up all the paperwork, you sit down at a table, and everyone signs a bazillion pieces of paper, and you get handed the keys to your new home. There's a lot involved there. Again, could you do it yourself? Probably. But look, I would love to help you. The right real estate professional, most of these steps are taken care of. That whole chart that you just saw, all of that happens in the background. After you take care of the initial getting your credit report and making sure you've corrected it, taking care of how you use your credit, and meeting with the lender. Once you do that, everything else is taken care of by the real estate professional, the realtor, like myself. And quite frankly, I can even recommend several incredible mortgage brokers and lenders that will work with you in almost every circumstance possible, no matter where you're at financially. So really, from beginning to end, you really shouldn't have to stress out or worry about it or have any surprises or be blindsided any time along the process. And what that does is it pretty much leaves the fun, the emotion, and the excitement of the home buying process your primary job. And that's really what it should be. This is an incredible time when you're moving. Trust me, I've done it. I'm in my fourth home. And every time is exciting to get into it, you know, working up, building up to it, the excitement, and the movings, and then the getting it together. And then it's really a fun job. And you don't want to ruin it with a whole bunch of horrible emotional, financial decisions and everything going on during the buying process. So look, if you'd like some help, or you just have questions, look, you know, no obligation whatsoever. I mean, this is why I do this on the internet. This is why I enjoy helping people and moving people along in the process. But if you need help, question, call me. You can text me or email. You have any questions or issues you may be having at any stage in the process. Or like I just said, if you are ready to make that move to a new home, or quite frankly, if you want to sell a home, I'd love to guide you through this truly exciting time. So give me a call. Text, email me today. There's my name and my my face, so you'll recognize me when we meet. My name is Mike Mortensen. I am with Exit Realty Associates, and that is my direct number, again, 703-888-9947. Give me a call. You can text me at that number. I'll get back to you as soon as possible. Or if you feel more comfortable, just drop me an email, Mike Mortensen, Realtor, @gmail.com, and I will respond as soon as possible. And I look forward to it. I mean, like I said, I hope you can hear it in my voice. I get excited about the whole process, and just watching people from beginning to end, and to be able to hand those keys to someone and visit after they've started getting it decorated. It's really cool. So anyhow, give me a call, or if nothing else, I hope that this webinar or video that you're watching is helpful, and it makes your home buying process a really memorable and exciting one. So until we meet or talk, I wish you the best of luck, and thanks for watching. Okay, so now I've stopped the recording because I am going to be replaying that video there. What I did want to do is go back to, I know you're seeing all this here. I think that's where I'm going to go, and we're going to stop here. There, so we'll come back to just my smiling face. So if you do have any questions, feel free to ask. We've gone a little over a half hour. I didn't really want to go much more than a half hour, 45 minutes. So about just barely over a half hour. I think we're at 33 minutes. So if you have any questions, okay, Julie is asking, what's the average down payment I should expect as a first-time home buyer? Well, actually, Julie, as a first-time home buyer, one of the options you have is an FHA loan, which means you only have to go in with a lot less of a down payment. You can get in for like 3.5%, which, you know, $100,000 loan, you only need $3,500 for a down payment. I mean, that's incredible. I mean, even $200,000 home, you only need $7,000. And a lot of times, you can ask the seller to pay closing costs. So literally, when you go in to buy this home, you're really going in at just the down payment and, a few ancillary costs. But for the most part, and a lot of times a buyer will say, or a seller will say, well, no, we're not going to pay closing costs. Well, then what a buyer can do is say, okay, well, we'll actually offer, let's say the closing costs were $7,000. You can say, I will, or let the closing costs, yeah, let's say they were 5 to 7,000, whatever they are. You can say, I'll offer to pay $5 to $7,000 more for the home if you pay the closing costs. See, so basically, you're paying them, you're adding it into your mortgage, but you don't have to pay the cash right up front. As long as you're not bumping the house over its appraisal value, a lot of times that works that way. So really, you don't have to worry about, you hear all the horror stories of, well, all banks need 20% down to get in now. No, you don't. Some of the biggest ones now are even, they're talking 10, maybe 15%. But yeah, there's a lot of innovative programs out there that are, 3, 5, 7, 10%. So I wouldn't let a down payment scare you right now until you talk to the broker, until you talk to your lender. A lender will really give you an idea of what all of the options are out there. And again, like I've said before, I have several lenders that have taken people that look like they'd have a hard time renting, and they ended up buying a home. So, where there's a will, there's a way. These lenders want you to move into your new home. Okay, I have a couple other questions about down payments. Hopefully I answered them there. What about appraisals? Well, again, what about appraisals? That's going to happen after your contract has been ratified. After both of you, the seller, and you agree and shake hands and sign the contract, then you start working towards settlement, which normally is going to be about 30 to 45 days from the time you sign your contract. And what'll happen there is you've got a certain amount of time. A lot of times there's a clause in the contract that says, look, we have X amount of time before that we have to have an appraisal done. And if the appraisal isn't not at least the amount that we're offering, the contract is null and void, and you can back out of it. But you have to do it within that time frame that you have. So that's something, as soon as the contract is signed, there's a lot of wheels that you want to start moving. Okay, we have to get an appraisal. We want to have and a lot of times the bank is going to do that appraisal pretty fast, because the bank is the big one that needs to have that appraisal, because the bank doesn't want to pay for a mortgage if the house isn't worth what they're paying. But another thing, a lot of times there'll be a clause that you can have in your contract, or you can go without the clause, but the clause will be for a home inspection. And what you would do is say, okay, well, within X amount of days, we want to have a home inspection. And then we have the option of telling the seller, well, we found these things that we would like you to take care of. And if the seller says no, you can either say, okay, well, we'll take care of them. Or there's another, again, whatever's in the contract or whatever your clause says, but there can be an option to where you say, well, then we can also back out if there are structural issues that we find with the house, or some major issues that the seller is not willing to cover. So that's, I think that answer, you were asking appraisals, a lot that's handled by your lender. The home inspection is mostly handled by you. And again, that's all that can all be handled through your realtor. I'd love to do that. Again, I work with a couple inspectors that really go above and beyond, not just for the inspection, but they also go the extra mile after the inspection. Year after year, they'll actually follow up with reminders on how to take care of your house, or they'll actually come in on the day of the inspection. They'll write down all of the serial numbers and all the models of all your appliances in the house, and your heater and your water heater and your furnace and everything. And then they will actually send out any recall notices to you. They'll send repair or upkeep notices to you on a regular basis. So yeah, some of these inspectors are really good. And like I said, I can put you in touch with them. I tell you what, it looks like most of it I've answered those questions. And we're going to do this again. I will be advertising and marketing when the next one is. And if I have your email address, I will shoot you an email to tell you when our next one is and try to get some of the questions answered then as well. We've already gone considerably over. So until the next time, be on the lookout for an email from me, or look for another marketing message that you got when you found this. Or come back to my YouTube page or my Google Plus page, and you can rewatch these videos, or you can get in touch with me directly from there. So until then, I hope you have a great day and good luck in your house hunting, and we will talk to you soon. Thanks a lot.